All right, folks are streaming in. Wanted to say thank you to everyone for being so prompt. Miguel, Ishan, and I are looking forward to the next 45 minutes to an hour with the whole group. So we'll wait a few more minutes before getting started, just to make sure we've got the entire set of attendees on, and then Miguel, Ishan will jump into intros and get things moving. And we're off. A big thank you to everyone. Summer may seem like an enjoyable time for vacations, but I would also imagine everyone on this call is also busier than ever. So we appreciate the time that everyone has taken to learn a bit from me, Sean, Miguel, and myself about how to calculate your R&D tax credit using Row. So without further ado, Miguel, why don't we start with the round of intros, and then I'll pass it over to you to continue the conversation. For those that I haven't met, my name's Dominic. I lead Rose Partner Program, background a decade in fintech, serving accountants, tax professionals, SMBs, and startups. Fortunate to know Ishan and Miguel personally as well, and have enjoyed all the opportunities that we've had to discuss opportunities, shared customers, and then ultimately educating people on things that they may not be fully privy to. Thank you everyone for joining. Miguel, over to you.
Thank you, Dom. Yeah, I'm Miguel, by way of introduction. Three kids, three cats, and I have the honor of leading TaxHack. As a firm, we service the space between our fintech partners, the tax compliance and government, and our clients, who are largely startups, SaaS companies, digital creatives, folks that are doing really cool things. We have the honor of serving our clients in a way that helps deal with the mess of regulation in what we hope is a frictionless environment, or at least a less friction way. So excited to share this one strategy with you to hopefully create some value, some actionable value that you can take into business. And a big part of what I do is I get to work with awesome folks on my team who are leaders in their own field, who we've brought over to serve the same mission. So with that, I'll hand it over to you, Sean.
Yeah, thanks, Miguel. My name is Ishan for everyone hasn't met me yet. Work with Miguel to lead up the specialty tax team at TaxHack, working on R&D credits. Come from one of Miguel's rival firms at the Big Four, so I've experienced there serving clients in the R&D tax credit space as well. So I'll kick it back over to you, Miguel, and we can get started.
Absolutely. So we want to kick things off and kind of let everyone know what we're going to cover today. You're in the right place if you want to learn how to create tax credits in your business using tools available to you, especially and specifically using Row. So we'll kick off with what our learning objectives are. We'll talk about the R&D tax credit, a little bit about legislation that just came in that's really, I think, exciting for our clients and for folks that develop technology. Costs that usually have to be amortized are now getting expense treatment. As you know, that's the headline. We'll talk about how we use the Row platform to do that. And then we'll conclude with how do I identify an opportunity? So that's the kind of nuts and bolts of what we'll cover, and we'll end with some Q&A. So if you have questions during, I encourage you put them in the chat, and we'll pick them up as we go. Sorry, we will not pick them. So what we'll do is we'll note them as we go, and then we'll answer them all together at the end. So if you have a question midway, just put it in. Just know that we'll get to it at the end. And before we kick things off, little disclaimer that our lawyers make us say on every presentation. Generally, you guys can read fast, so I can go through it, but there are always exceptions to every rule. Oftentimes, we're looking for those exceptions, but also in terms of benefits, just note there are exceptions, and those exceptions could be you. So what we want to cover and we want to make sure you understand is ultimately, I would say that the value of this call is we want to help you find 10,000 bucks within this hour. So if I can take an hour of your time and create $10,000 of value, I think it's a pretty good trade-off. So we'll cover the basics. We'll talk about what expenses we bring in to determine the credit. We'll talk about things that can go wrong. So for those of our clients who say, hey, AI's got this, right? AI does not got this yet. And there are other things that we don't want to mess up when we do it. That's why we specialize in this. That's why we have people that have been in tax for 15, 20, 25 years to make sure that we're keeping the tech honest. And we'll definitely cover how we've used Row and tools within Row to help us get there faster.
So Miguel, thinking about how we'll spend, the next 30, 45 minutes reviewing much of what you just covered, I also like to put myself into the shoes of a founder, of an entrepreneur that is thinking of the million and one things on their to-do list. Um, for your team, you obviously get the opportunity to serve these great business leaders and founders. Like, why for them, why should the R&D tax credit matter? If there's so much going on running a business, this seems a little bit almost like a moonshot. You mentioned $10,000 in return for an hour of time. Would love for you to just explain a little bit more about why someone should care.
Yeah, no, thanks. I mean, it's a great question. I think it's why we want to mention it early that the R&D tax credit is not about maximizing deductions. It's not about all these other things that reduce tax. It's about bringing back capital into the business. So the R&D tax credit is in founder speak, non-dilutive capital that extends your run rate that you can use to invest in your business to really drive what you're doing. Um, the cost of capital is getting like we're well aware the cost of capital is going up in terms of working in an inflation environment. Things are getting tougher, and we want to make sure that strategies like this don't get left on the table. So we'll talk a little about what the R&D tax credit is, but bottom line, it matters because by doing nothing different, there is already a tax credit in your business. And the question is, what are the administrative hurdles? What's all the paperwork BS? That's what a good partner like ourselves figures out. But in terms of capturing the value that already exists, that's what we're looking for here. So it already exists. It's on the table. We just got to take it off.
So I'm hearing you on the why. The what seems like a worthwhile breakdown too. Do you mind just letting us know what it actually is?
Yeah. So I mentioned a little bit like this is not a deduction. This is not about creating an expense that reduces your income and therefore you have a lower tax bill. What this is about is whether you're profitable or not, is getting back tax dollars that you're already paying. Now, for many companies, that means payroll taxes. So if you're not in the position where you're profitable already, take the example of a C Corp, you are paying employer taxes every payroll run. So what we're doing with the tax credit is we're getting a dollar for dollar credit that the government has created as an incentive program for domestic activities. So you're rewarding innovation. It's a good policy that you're rewarding innovation that is happening here. So you don't get it on foreign development. There is a component of managing that foreign development if the US staff is here that the credit can get, but it's really for costs and payroll that happen in the US. So for those hearing, wait a minute, I have a dev team that's offshore. There's still credit for you. It's just going to be based on certain costs that come into business, which we'll talk about. If you are a profitable business, we have a lot of clients that maybe bootstrapped and they're set up as LLCs or pass-through entities, and they're profitable. For example, if you are a development agency, then you have a pass-through income tax, and the R&D tax credit can offset that as well. Broadly, it applies to employer costs, to anything that is attributed to developing the product. including hosting and other fees that we'll talk about as we go.
I think it's a nice segue. Ishan mentioned having an expert in the room. I know Miguel's been excited ever since you've joined the team, but most importantly, like you're speaking with a client, they want to break down the data. You've got to give it to them. What are the expenses that are going to count?
Yeah, I mean, I think as Miguel was alluding to, that's probably what everybody's wondering, right? What can I take? What can I claim? That's the excitement around that. So there are four types of expenses and buckets we can use to calculate the credit and eventually get your benefit. The first one are employee wages. So the wages of your internal personnel performing any type of development or R&D activity. And this also includes other folks that are sort of touching R&D as well. So it doesn't have to be your direct engineers, but some ancillary teams and folks as well. The second one are technical contractors or consultants. So onshore contractors or consultants that are performing development for you, developing products, working on testing, anything of that nature. The third is cloud or hosting expenses. So let's think of these as hosting platforms that you use for development, testing, spinning up deployment or production environments in the cloud, not your Dropbox or your Google Drive or your Google Workspace that you use sort of for operational purposes. And the last one is supplies. So this sort of relates to our manufacturing, our product hardware companies where they're actually using prototypes, testing units, pilot models to get their product out and throughout the testing and experimental phase. And then this could be things like beakers, test tubes for our pharmaceutical clients as well. So those are the four large buckets of expenses that count. The key is to remember that these have to be all domestic and onshore costs.
And I'll just add, I mean, I think a lot of the examples here serve the tech space. We have a large group of CPG clients, engineering clients, and the same thought process applies. If you're developing a new line or a new product that doesn't exist or components of that product or reconfiguring how it's used, we can get creative, and we do get creative about what costs feed into that. And that's part of the analysis that I think is helpful, especially in the first year, to have someone that knows the space to do, because it allows you to think more comprehensively about, hey, what is R&D within our business? We've even had companies that maybe they develop using a third party, and as long as you own the IP, there's management time and there are costs associated to managing that third party development that is going to qualify. So when we say employee wages, it's not just for pure developers. I think that's an important point. It's also for management, project managers, even people that are on the sales side to some extent, if they are collecting feedback that helps drive product specifications, are going to qualify. And then that last point I want to make is, Ishan touched on it. Your tech stack, if we develop our tool internally ourselves, like licenses for everything are going up. Everything's getting expensive. So the R&D tax credit allows you to get some nugget on all of those costs. So something to be very aware of is that the fees or licenses that you pay that support innovation all qualify.
Great. So we're thinking about qualification, we're thinking about estimates. I think if we move on and kind of give folks the meat to chew on, which is just how do they think about savings, right? There's the estimates, there's the actual savings. Your team's going to go through the study. What is a typical customer kind of thinking about is their ballpark before we hit on some of the great case studies that y'all brought?
Yeah, so typically, just to get you guys thinking about what is the juice to squeeze, is we can say anywhere from 6 to 10% of R&D spend is your numbers. So if you're looking at if you're looking at your P&L and you've got 500K dedicated to engineers, we're going to determine, for US based engineers, we're going to assume 10% typically at the federal level. And I want to note that that's just the federal level. There's also a state component depending on where they're based that increases that. So, California, for example, you're looking at another 5 to 7.5%. So we're saying 6 to 10% just as kind of back of the envelope conservative estimate, likely more depending on where those employees are located. So back to my example of, hey, you've got 500K in annual spend, you're looking at about a $50,000 credit. So just like that, you can start kind of thinking about, hey, this is my baseline. Now, how can I grow it? Looking at the cost of my tech stack, maybe non R&D, maybe non-developer time that's spent in defining product specifications. Some key components of it is even if you haven't claimed the R&D tax credits, so maybe you're like some of the clients or businesses that we've talked to in the last 2, 3 years who said, you know what, if I have to amortize my expenses, I'm not going to look at the R&D tax credit. We still, we'll caveat that there's still value in claiming it, even with the amortization. But even if you're someone said, you know what, I'm just not going to take the R&D credit, we can go back. So you can go back 4 years, 3 to 4 years, on depending on a few different things, and actually file to get R&D tax credits retroactively. If you are claiming the R&D tax credit and end up with a huge credit, the benefit to it too is that it banks going forward. So you can carry it 20 years. And there are some rules about being able to use the R&D tax credit to offset capital gains. So it's really banking a dollar for dollar benefit that you can use going forward. But if you think about kind of the annual compound of that R&D tax credit, and even if you start to think about kind of the net present value of money and the cost of capital, it's really something that we think is a no-brainer when you're looking at, hey, how do I extend my run rate? How do I increase cash in the business that allows me to make an extra investment or extend my run rate? So it's really something that can be super, super, super valuable because you can use it. You can go back and get it. You can go forward and carrying it. Again, it's extremely valuable for the clients that we do work with.
Miguel, it almost sounds like people could look at this and say, oh, there's an opportunity cost that I have not explored yet. Maybe one point to clarify, what do those retroactive 3 years look like to a client if you're able to find the credit? Is it similar to the carry forward? It maybe would be helpful to think about someone who's like, no, we've been running at this for a couple of years now. I'd love to see this thing reviewed retroactively. Like, how are you explaining to the clients how that claim or that credit may be used going forward?
Yeah, and Ishan, feel free to add to this, but essentially it's the same math. I mean, it's going to be 10% of whatever the amounts were in prior years. And oftentimes what we do with clients is we'll math it out. Like, why stay abstract about it? I think right now we kind of want to feed the inspiration that, yeah, 10% of prior year spend. But if you're unsure, uncertain, and want to get a sense if really there's enough juice to squeeze, that's the beauty of being in this ecosystem. We'll help math that out, and if there's an opportunity that you think's worth it, we'll take care of it. Everything from prior tax filings to guiding you through how to claim it with payroll taxes. That's where we fit in. Do you want to add to that,
Yeah.
Ishan?
Yeah, I'll just say the beautiful thing about going back 3 years is typically as the business grows, and if the business is growing, from a tech standpoint, your credit is just getting larger year over year, right? You're spending more money on personnel, tech stack, platforms. So when we go back 3 years, you can kind of see an increasing wave of R&D credits just because of natural increase in spending across the years. And I think the second thing is more times than not, we see folks that have a ballpark in their head of what their credit may look like just based on what you see on the screen here. But more times than not, we're able to squeeze out a little more juice than business owners have in their mind already. So I think that's beneficial for when we come in and we're able to sort of cast a wide net and even carve out some things, but still land at a place that's much higher than what the founder or the CEO has in mind.
That might be a good segue. I know you all have some happy customers that you've been able to support the study with, helping unlock some savings to the tax credit. Would love for you to just share with the group a couple of the "We made it real" examples that are provided here.
Yeah, absolutely. No, thanks for that, Dom. And I always start kind of with this the smaller. We're not big enough. I think we really are passionate about helping. Um, you know, what we'll call them small businesses. Can also call them kind of early stage companies. Ishan and I both come from the Big Four, where We're talking about billion-dollar credits. These are very large companies that have internal tax teams that are doing their credit. Well, we kind of figured, the average founder who's got, is dealing with contracts, dealing with bringing in new customers, who's dealing with, even HR, right? You kind of wear a million hats. You don't have time to really deal with a lot of stuff. So we're really passionate and excited that we've been able to get this credit for, your run of the mill bootstrap. Maybe year one it was 100% self funded. Year two you got an angel round and you started investing in development. Maybe year three you finally paid yourself a salary. Those are the ramp up periods that we evaluate. So we're really, I think we're kind of underselling that we really do look at the full year growth cycle and 3 year, 4 year period of growth to evaluate what the credit is. So our example number one was a self-funded client who had a very small team on payroll. They all wore different hats. No one was directly an engineer. The founder was technical early on, and as we looked at kind of how their growth spent, we were able to get them $75,000 that when they, by the time they got it, they had the payroll. They got some funding. They got the payroll where they were essentially not paying any payroll taxes. So when you run that payroll cycle, you'll pay your team. Let's just keep numbers easy. $10,000. That's the pull. Well, that's not what gets taken out of your account, right? You get 10,000 plus an extra 5,000 for taxes, and half of that is what the company spends. So we're able to wipe that out if if we're taking it against payroll. The other way you can get it as well is you can get that cash back. So you can get a check back from the government with interest. If there's an amendment, the interest rate is about 7-8%. So it cuts both ways. You pay your taxes late, you get interest rate, but also if you get a refund from a prior period, you get it with interest. So really, I think excited. I think we've got other bigger examples that seem a little juicier that from a tax credit standpoint are more exciting. But for me, just knowing how valuable as a founder myself, getting that extra check is, those are the ones that I personally hang my hat on. So small self-funded startup, did 2 year project, $75,000, hit the bank account, and founder used it for all kinds of incredible reasons.
Miguel, I think some of the attendees share in your excitement. Just off this first example alone, we've got a handful of questions that are coming in that we'll make sure we address related once we get to Q&A. But no, it's a great start on the first example too.
Yeah, and look, I don't want to get political, but I'll get excited. The government doesn't need your money. They're very comfortable running trillion-dollar deficits. Our business owners, our business leaders, our founders that have great ideas that are just like fighting for that next deal, for that next fundraise, really need that money. So we're very passionate about not keeping that money with Uncle Sam and putting it where capital is going to be best used, which is with anyone building a business.
Yeah, and I'll move on to the next example, kind of what we talked about earlier. This SaaS company came to us not knowing about the credit, which is an extremely common situation. Obviously, bootstrap, heads down, focusing on product, getting product out, and getting new users and customers in. That totally just flew by the R&D tax credit and didn't know about it. So if we go back 3 years, we saved this client $120,000. And like I mentioned earlier, that spend was going up and up across the 3 years. Also saved them additional money for the current year credit, almost totaling $200,000 across a span of 4 tax years. So that was just money that was left on the table simply because the founders had no idea about the credit and that it existed. And this was and in addition, we were able to claim a state credit as well for some of their state tax liability that they owed. So a great example of what going back 3 years can do, also claiming the current year and our ability to do that at the same time. So I think one of the questions we typically get is, wow, going back 3 years sounds like a lot of work. And I have to do the current year and I'm already behind on that. Well, we're able to do all 4 years simultaneously. So it's not, 4 sort of separate touch points, 4 set of pipelines we're working on. it's one pipeline that we can sort of merge into four on our end, and make things easy, make things streamlined, so you can claim the credit for this entire period pretty seamlessly.
No, that's great, Sean. And we'll talk a little bit about kind of the administrative kind of process of getting that. There's a few caveats there, but really, I mean, I think what we're doing is we're getting a sense of the product development cycle over that period, and with an understanding of product, we are able to do the technical piece on our end, and all we need from you is payroll and expense data, which we're going to get to. And the last example I'll share is, we work with a lot of digital agencies, digital marketers that, they build their own, a lot of our clients, they build their own tech stack. MarTech is kind of a function of combining various tools. And today we're seeing that kind of in the AI space, right? Like everything's agentic and connecting, 4 or 5 different systems. Oftentimes, it used to be that you had to have your own code base. I think the definition, I think where we're creative is we're expanding the definition based on tax cases to create a more holistic and more accurate view of what R&D really is. So with this digital marketing client who built something like that, they kind of, put together a hodgepodge of, API connectors. What we did is we identified what was proprietary, and based on a time-based survey, so how much time did the CEO spend? Often that's where the payroll is the highest. How much time is the C-suite spending? Even, CX people, client people who are account managers, we found that they were working on defining, product specifications based on customer needs. And what we did for them is we basically in 1 year found $60,000 worth of a tax credit based on their product. And for a lot of these agencies, they're very high margin. They have a personal tax bill. And the beauty of this credit is that if you're a small business, you can offset your personal income taxes. You might say, wait a minute, like this client did, I didn't pay $60,000 in taxes this year. We said, hold on, you with your W-2 did. So we were actually able to get back their W-2 wages to offset their tax bill. So they prepaid, $100,000 in taxes. When they filed their tax return, they got a $60,000 refund that cleared their account. That was for an on-time filing. So it really is, again, I think we see this stuff on a day-to-day. I think we realize more and more that we've got to get out there and kind of share these wins. So, we're really excited about, hopefully, if that resonates with you, we can do the same for you.
Great. Well, sounds nice and dandy, but there's certainly an element of realism that get put into the process. And Ishan, with your experience, we'd love to spend a couple of minutes just hearing about some of the common challenges that you're discussing with clients, things that may come up as you go about calculating the R&D credit itself.
Yeah, no, that's a great point, Dom. So I think we can all agree when you think about corporate tax or even your personal income tax, right? The 2 things that come to mind are, how to pay the least amount of tax and staying compliant or avoiding audit, right? These challenges support that, and that's our job to support that. So the first one that we typically see, missed or inaccurate qualified expenses. So this has to do a lot with not tracking expenses correctly, accurately across a year, and maybe truing it up at the end of the year. Dom, I know you'll get to that when we check out the platform. So that's one of the most common ones. The second, probably most common one, poor supporting documentation. So not collecting or generating the correct documentation or the best documentation during the study is extremely crucial. It's one of the areas we focus on. It's one of the areas the IRS focuses on. But this can be overlooked if you're trying to file in a quick timeline or anything like that. So we want to make sure that this is taken care of. And the key is during the study, we want to generate that documentation. Lastly, and again, Don will touch on this when we go through the platform, but manually tracking inefficiencies or siloed systems. So we all have a different payroll provider, then a different GL system, and a different accounting system and invoicing system. So it's just the nature of the business and the nature of sort of the startup sort of functions where There's so many different siloed systems where you're pulling data from. You may tag something in one system and not the other. So these are definitely common challenges we see in our sort of client base. And again, these focus on the areas of, staying compliant, avoiding audit, and wanting to, be extremely accurate and intentional with what we're doing. And then obviously our goal at the end of the day with that is to generate the best credit we can or the best benefit we can and have you paying the least tax.
Enter row. Now, I might be a little biased in answering the question, but I know for the two of you have that practical exposure to the system, to some of the consolidation, Ishan, that you mentioned. What is it about the platform that you see as an immediate value add to your relationships with your clients?
Yeah, I mean, we came to, we use Row ourselves, and I think we came to the conclusion that if you can have a kind of reporting dashboard that can pull everything from the siloed systems, that you really have a much faster way to get to, okay, what's my base amount? So reasons we love Row is, I mean, we are accountants by nature. Row speaks to us. We know how to manipulate it. We know how to tag it. And we also think that the UX is, we figured out is that the UX is so navigable that we can actually train our clients to make our lives easier, their lives easier by identifying qualifying costs throughout the year. So we're really excited to bring this idea forward. That, like, look, we know that we use Row to identify R&D tax credit. Other clients can do it too. And the beauty about it all is that, going back to Ishan's point on documentation, is don't be like the clients that we worked with after they got audited, who did it all themselves, did it kind of back the envelope, kind of like estimated it. Because when it gets reviewed, when you get a letter saying, hey, please explain to me the base cost, and you just give them everything, they're going to figure out based on their interpretation what R&D is. So what documentation does and audit, tracked systems do is that they put forward, hey, we've thought about all the questions you're going to have, and this is our definition of R&D. So bottom line, you do it yourself. IRS is going to define what R&D is. What we do is we make sure that definition is established in the documentation, but also at the data level. So what's really cool, and I know we're going to get to it, I don't want to steal your thunder, Dom, is how we create that audit-ready tagging system within the Row platform.
Well, why don't we, before hopping into the platform so folks can see an example of how your team is more or less fetching this data from their transactions and expenses, what are you looking at within Row first across these, and then we'll take ourselves into the platform.
Yeah, definitely. So I kind of mentioned it, the expense tagging, the ability to look at the transaction and in real time, instead of having to go back and do it, in real time say, yes, this was for R&D, and tagging it is going to allow you to build that base over time. The second part is when you're looking for payroll expenses, rather than have to wait till the end of the year, what you can do in real time within Row is actually filter for the transactions that are payroll, and you can identify, depending on how your system's set up, you can actually identify in real time, again, the payroll that is applicable to R&D versus otherwise. Same thing with the fees for SaaS. Sometimes they're monthly fees, sometimes they're quarterly, sometimes they're annual. Again, being able to in real time see the vendor at the ledger detail is going to allow you to, as a founder, see really quickly and really quickly identify what's for R&D. What you don't want also say is that you have maybe a CFO or a bookkeeper. They are tagging transactions for management reporting purposes, meaning they might put your overhead expenses in a certain category that for R&D might get missed. What I mean by that is that there might be subscription fees that are getting put as a sales system subscription, as an example, on the P&L. Well, rather than have to dig into the P&L line by line, identifying that in real time allows you to determine what R&D is without messing up what gets happening for bookkeeping purposes. The last point I'll make here is that we love the summary functions that we can see. I'm excited for Dom to show him. But at the end of the day, doing all these things on the ground level should give you a view at a higher level of what we're really talking about. So the custom reporting that you can set up in Row to track your R&D expenses solves a lot of problems, both for founder and operator, as well as for your tax specialist.
Great. Well, why don't we hop in? Um, Again, team, this is for everyone attending a demo environment of an example customer that Ishan and Miguel thinks that there's a conversation to have around the potential for an R&D tax credit. So Miguel, when we were chatting, there's about three places that you're starting with any given client within their Row platform. What are you jumping to first?
Yeah, I think we're going to look at the payroll first.
Okay. All right.
So we're going to go to
Monitor
banking.
banking.
Yep. And what we're going to find here is a transaction that is associated with, we're calling it engineering. So the tag under departments is where we're looking at, what really should qualify. So what we would do is exactly right. We would look at payroll. We'd say, hey, that's payroll for our R&D. We've tagged it as engineering. And just like that, you've done what you needed to do. And you'll see, I think we have a pre-populated transaction already. You can see when you look down, we're also doing that for Amazon Web Services. Again, we've tagged it. But the other place we can go is to look at the overall expenses. So when you look at company expenses, you're doing the same thing. You're now looking at a subset of your financial data, and you're just combing through it and identifying what qualifies R&D. So you can see we have engineering as a department. We also have R&D, and those two combined, when they get tagged throughout. Dom, I don't think we're going to go through every transaction on this call, but we'd encourage you to do it. Those are going to end up flowing up to a report level where you can do the quick math back of envelope.
Yeah, and I think here I'll just add, this is where clients will send us reports and they'll leave IT out or something like that because they don't think it's R&D. So I think here's where it gets important, where we can generate custom reports, where we can get a lot more expenses than the client may think that are R&D, so that we can sort of review everything at a high level and see if there are more expenses that may qualify than what we may think is traditional R&D.
Yeah, and I think going from like 101 to 201, I think another cool feature is that, again, it's typically the bookkeeper that's tagging things for accounting purposes, categorizing them on the ledger system, whether that's, I won't mention them, but you know what they are. What you can do here through Row is you can create limited user access to allow your technical people, maybe your VP of engineering, maybe your CTO, to go through and take a pass. So it allows the people that are actually in the department to identify what's related, because sometimes they have a different point of view than your bookkeeper, and a better point of view when it comes to R&D. Sean, you want to? So now we have the report. I think, Sean, what you can do is you can do the quick math on what's our tax credit.
Yeah, so I mean, this is a great view from a departmental standpoint. When we talk about departments, this is a great feature and a great sort of support that we can include. As you can see, there's about $10,000 of R&D spend, and then $115,000 of engineering spend. So that sort of lands us at about, if we're only taking a look at those two departments, about $125,000 of qualified spend. Would give us approximately a $12,500 credit at the federal level. And then let's say this company is in California, about an $11,000 credit at the state level as well. And that's simply just looking at this view. That took us all of maybe less than 5 minutes to get an estimate out. And because everything's tagged, everything's organized, so great in this platform.
Yeah, and assuming that that's assuming that these are annual figures, but just to give you kind of a range, if these were monthly figures and you annualize that, you're looking at a $2 million base. And again, taking 10% of that, I mean, that's a $200,000 credit. So you can get a sense of kind of what the range of possibilities are. And the beauty of it is that we can do it in one place really quickly. But we think this is a best practice. So those on row department for R&D or a tag for R&D is going to be a best practice to be able to do back of envelope math.
And here we are to discuss more of them. I mean, look, the first thing that I heard from the two of you is empower the workforce to help identify these expenses related to the departments that can help with the credit. That sounds like a great thing to put into practice. For, I think, Ishan, what are some of the things that you're recommending clients keep in mind? What are some of the things that you're coaching folks on year round to ensure that this credit can get optimized?
Yeah, great question. I think it falls into two categories. The first is tracking, the second is reporting, which you've probably seen as a common theme as we jumped into the demo and even jump out of it. But monthly categorization and tracking by project, employee, department. So those are extremely important because we need real-time tracking to maintain accuracy, and some sort of boundary for the report that you generate at the end of the year. If you want a mid-year estimate or quarterly estimates, these are extremely important to do in real time and to maintain sort of some boundary in tracking and categorization. So that tagging system is great that we just looked at. You're able to tag by department or even have a reviewer, a manager, or someone like that to take a first pass at those transactions. The last two, communicating with the tax advisor, CPA, and then your financial stack, so Row and the tax act team. So again, this is sort of where the reporting comes into play, the ability to generate custom reports to communicate those to your tax advisor and CPA. That can happen in real time as long as you're tracking your expenses and categorizing them accurately and correctly. And then obviously with Row's platform and tech stack, you merge that with tax expertise or R&D tax credit expertise. You just saw in a matter of about, call it 5 minutes, what's able to be accomplished just with the platform and the expertise.
Yeah, and I'll just add before we get to conclusions that doing that in an iterative process is really going to be the best way to grow the credit. I think by the time you get to end of year, and we're guilty of it as a tax services firm, we need to take the data that's available and make it work. And we can, the tools in our toolbox to expand the credit are, I would say more limited when we're doing it retroactively than when we're doing it in real time. So the ability to, get on with your tax advisor in the year, whether it's 2 times a year, the way we work with our clients, or, in November, December, is you can go through a process of saying like, hey, like, are we really thinking about and are really tagging everything that should be for R&D? You try to do that around April 15th, you're typically going to get a tax team that's, really compressed in terms of their ability to be that creative. And you're going to, we're going to take the data you have. So the ability to do it in an iterative basis is just going to give space to the time to think about, are we really being comprehensive about R&D? So I think the big, best practice that we're saying here is if you can tag it within your Row platform, you can get, you can kind of right size it in real time instead of just taking and accepting whatever numbers you get when tax time hits. I think a lot of I think of our competitors will just focus on, hey, let me just take your data, plug it in, give you the credit. We really take an advisory approach to making sure that we're growing this as big as we can, because ultimately you are a far better capital allocator than the government. So I'll leave it there before conclusions.
Yeah, I mean, look, and for the two of you, and certainly out of respect for your profession and expertise, that third bullet of communicating with the tax pro, being in lockstep with your CPA, it's what we are coaching every Row company coming to us that does not have a trusted business advisor. So for
Yeah.
folks that are on this call, watch the webinar. If you are not working with a tax pro, if you're not working with that trusted business advisor, please ask where to start. A few of us on the call might be able to help.
Yeah, absolutely. And I'll just add to that, even if you do have an advisor, they are overwhelmed. I'm a tax guy myself. I can tell you that there are elements or strategies that I have to reach out to a partner for to get their support on. We are that for your CPA and your tax advisor. So a big part of what we do is we work with CPA and tax advisor team as a comprehensive team to make sure that we're on the same page. So, if you're kind of thinking, wait, I already have a tax, CPA, do they do this? If they don't, they often are looking for a partner like us to work with them to just work on this part if the juice is big enough to squeeze, because they don't want the risk of figuring out everything to do with the R&D tax credit. CPAs by default are going to be conservative. So they're going to say, hey, I'm not going to figure all that out. You need someone else. That's where we come in. We are tax people, for founders. So we're really good at plugging into that whole team and helping them have the largest credit that we're all comfortable with.
Great. Well, we'll want to give the two of you to summarize some of the conclusions. We'll hop into Q&A. Like I mentioned, we had a few roll in during the course of the presentation, so I want to make sure that every attendee gets their questions answered. But I'll hand it over to you for conclusions before I start peppering you with all the questions.
Yeah, no, that sounds great. I think the conclusions, revolve around, how do we stay compliant? How do we, mitigate taxes as much as possible? And then avoiding audits as well, right? The way we do that is through, like we said, accurate reporting and categorization and tracking, and then the ability and like you said, Dom, being side by side with your tax pro or CPA. The ways we do that, right? Planning ahead. We talk to a lot of founders that are, they're worried about what tax are they going to pay in April or September, October. And they've sort of got a ballpark or a financial model to keep track of. I think it's similar to what we just talked about in the Row platform, right? If you want to know that number, you need to accurately tag things and categorize things. So you've got that number in the back of your head, and so does your tax professional, your CPA. So leverage Row's platform. The unique feature set we just walked through is extremely robust and great for a cause like an R&D tax credit. Avoid some of the common challenges we talked about, right? The way to do that is to work with a professional or CPA or a firm that specializes in R&D tax credits, that knows what they're doing, is able to generate documentation for you, and not just a back of the envelope estimate that gets submitted or audited even later. So lastly, I think from this, you'll see that the merge of Row's technology, Miguel and I's R&D tax credit expertise sort of makes that into a seamless operation, right? You've got the financials in the Row platform. You've got our ability to take that from step one all the way to the final credit number, and then getting you through all the middle steps and supporting you through that process as well. And hopefully we've demonstrated that throughout that.
Yeah, and I'll just add three quick things. So one is that one of the pitfalls we want to avoid that's time sensitive is the deadline to amend 2022 is upon us. It's September if you're a partnership or an S corp, and it's going to be October. So going back those 3 years, and there is a tax credit, you'll want to do that in the next, I would say, 4 weeks, because again, you go to a tax advisor right at tax deadline, it's just not going to be possible. So there is some immediacy. That's the reason we're just focusing on, hey, how do we estimate what it is on this call? This is a 3-part series, so we'll get more into specifics of how our platform works. And the second point I want to make is about our platform. So we've developed ourselves a platform, with the founder in mind, that is low friction, and we feel is good UX. So and it's not a full DIY, you're on your own, best of luck. A lot of those DIY best of luck, if you have any issues, you have to email customer support at domainname.com. You never know who's answering those. So what we do is we have a tech-enabled service firm where you do everything you need to do through the platform. If you have any questions, you get stuck, your customer support team is a team of experts. So we want to make sure. And the third point I'll make is that in terms of estimating the credit, the next steps do involve understanding the product roadmap and time-based surveys. So it's just a little sneak peek into how we actually do it. So those time-based surveys are things that take each individual 5 minutes based on our platform. And that allows us to expand the percentage of their salary that applies to the tax credit. So there is a bit of an engagement process that we feel we've made way easier than maybe where Ishan and I came from, with the founder in mind. You don't want to spend your time on that. We've done a survey. Our average founders and teams themselves spend 1 to 2 hours on a first year engagement. So, and that means that it only goes down from there once we understand the product, once you're in our system. So estimating the credit is really step one. I think that's the final point. The next stage is to actually work through calculating what the actual credit is. And that's where we do our legwork to make sure that we are close, if not close, over the value that you expect from your R&D tax credit.
All right. Well, with the last uh nope, last 10 minutes or so, let's throw some questions in. Um, let's see, number one that we got, going back to your politics of Uncle Sam not needing our money. How does the one big beautiful bill affect the R&D tax credit?
Yeah, that's a really good question. If anything, it makes the R&D tax credit, I think, even more favorable. So what happened with the expiration of the Tax Cuts and Jobs Act was that in 2022, any company that engaged in software development, the development of IP, instead of taking a full deduction on the expense, would have to amortize 5 years if it was domestic development and 15 years if it was international. So we saw that, and that doesn't impact the credit. The credit's still calculated the same way, but it was related because the development expenses that we use to calculate the R&D tax credit were now amortized. So that meant that your income went up. Really unfair, really something that hit small tech really, 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 really hard. We all thought it wasn't. I guess I won't go into the how corrupt and inept Congress was with fixing that. They were supposed to. I suppose they let it hurt before claiming victory that now it's relieved. But we are back to old rules. We're back to basics, baby. So now you get a full deduction on that. We know that in practice there were some that said, you know what, we don't do R&D anymore. Like, we're not going to amortize, so we're just going to take the full deduction. So that's when we talk about the OBA, one big beautiful bill. What we're really excited about is that the deduction treatment came back. R&D tax credit didn't change really in the past, and it doesn't change now. I think what people may have done or felt is that, you know what, I'm going to pretend we don't do R&D, so I'm not going to take the R&D tax credit, and I'm going to take a full deduction. So if that was you, you now have the opportunity to keep your deductions the same if you did that, but now add in the R&D tax credit. So that's how it changes. But really, I mean, there's a lot of money that's going to come back. If you did amortize, you are now going to be able to amend your tax returns or take it all in 2025. This call is not on that. I think we will have a webinar fully dedicated, but it stands to benefit the ecosystem for sure, and we're really excited about that.
All right. We got the attendees and folks curious what types of industries are going to qualify or can qualify for the R&D tax credit just based off of what you've seen.
Yeah, I
Sean,
mean,
you
I
want to?
think, yeah, totally. I think this is a great question because oftentimes when we think of R&D, as we presented it today, is very tech forward. So your software, SaaS type companies. Or when some folks think of R&D, they think of your lab coat, beakers, test tubes, mixing chemical formulas together. But what we've noticed and found, based on our experiences, are there are a lot more industries and types of companies that qualify. Manufacturing companies. So where do your transmissions come from? Your tires, injection molding, semiconductor, and then moving on to your life sciences, medical devices, all the way to food and beverage, right? how are wines made, how are whiskeys made, how are beers made, right? They all go through some sort of chemical formulation that involves R&D. So I think that's where, we're sort of trying to broaden the scope of R&D. The tax definition of R&D is extremely broad. And people just think otherwise because it's the IRS, it's tax, right? But the definition of R&D is extremely broad to include all of this sort of development and type of R&D that's going on. So all tech, tech, software, hardware to manufacturing, pharmaceutical, med device, life sciences, all the way to food and beverage. And that includes, companies in between, digital marketing, MarTech, FinTech, health tech. There's a lot of just new industries where you add tech to the end of it that start, every single year. So we're seeing a lot of new industries that are able to qualify for the credit.
I'll just add two things. The ones that I found interesting, exciting are your CPG e-commerce companies that, maybe you source from, overseas, China, and, you think, wait a minute, like we are doing things related to product spec, but I don't know how big the R&D is. Well, we can capture the time you spend redesigning. And if there's any patents that are filed, patent costs can be included in the R&D tax credit. So, oftentimes when we talk about, consumer packaged goods companies or e-commerce companies, we've got a lot of clients that have developed some credit. And look, even if it's a $10,000 credit, the question I always ask is, why would you leave that with Uncle Sam? If that feels comfortable with you, then take out a check, write it for $10,000, send it to the Department of Treasury. I promise you they'll cash it. That's the equivalent of what you're doing by leaving 10,000 with the IRS. So I think it behooves all of us to find the right tech stack, the right financial stack, the right advisor stack to make sure that we're not leaving things on the table. And I think the other thing I'm really excited about is as we're seeing even like home services companies develop AI components in their business, does that qualify for R&D? And I'll say, yes, it depends. So we're really excited that we move with the industry, we move with the product cycle. And I just want to disclaim that there's probably industries that aren't even here yet today that are going to be the major benefactors. So if you're changing process, if there isn't the available off-the-shelf tool to satisfy your business needs, it will qualify. It doesn't need to cure cancer. It doesn't need to completely change the space, which you might be doing. But it can be something that you said, hey, the available systems and off-the-shelf solutions don't meet our needs. That's one of the questions we ask. Why doesn't it meet your needs? If you can fill that gap for us, we can claim the R&D tax credit for you.
All right. Well, you two are very punctual. I want to give you an opportunity to wrap our time together. To you two and to everyone that's joined, I'll say personally, thank you on behalf of Row. Any questions, please do reach out. But Miguel, Ishan, what's everyone looking at here?
Yeah, so we wanted to say, look, I mean, you can certainly reach out to us via our website, mytaxhack.com. We are giving you access directly to our onboarding specialist here. If this sounds like a conversation that you want to have, you speak with Ashton on our team, who will no questions asked, well, some questions asked, but no sale conversation, help you identify what your tax credit is. So that's something that we wanted to make a human available for. I know we live in the world of fill out a form, get an ebook, get on our newsletter. For this audience, we wanted to give you a direct line to our people that if you're ready to have a conversation, that QR code will take you to Ashton's Calendly and you'll be able to have that conversation. If you're in the stage of I just want to learn more and keep an eye on you guys, you can follow us on Instagram. You can also track us, but feel free to also directly connect with us. We're happy to help.
All right. Well, Miguel, Ishan, thank you both. Be seeing you in a couple of weeks on part 2.
We're excited to do that.
Good.
Thanks everyone for joining.
Thanks everyone. Take care.